Okay traders, welcome back to the Price Action Labs YouTube channel. So in this video we're going to be going over ICT and order flow masterclass, how you can predict every single fair value gap you trade with extreme levels of accuracy by only reading two numbers. Okay, so here we have the 5-minute chart on ES futures, the S&P 500 futures, right? So people often ask me what I trade. This is exactly what I trade. So to give you some context, right? So what's actually happened now, if we just start off on the weekly power of three, right? So the weekly power of three is very important because it tells you basically how far we are underneath the weekly opening price. So we can see over here, this is the weekly candle on Thursday, the 22nd of May, and this is the weekly opening price. So we're significantly below the weekly opening price. And so because of that, I do like to look for longs primarily as we're underpriced for the week. Think of it as we're underpriced for the week, we're below the weekly opening price. Now from here, after the power of three on the weekly time frame, I look for liquidity, right? A very, very simple liquidity. So we're looking for a previous day low sweep, right? PDL. Previous day low sweep, probably the greatest liquidity tip you can learn in the whole of ICT. When you see a previous day low sweep, this is where ideally you want to be buying from. This is what we can call our ICT Judah swing or the manipulation or whatever you want to call it, right? The low of the day, right, occurs below a previous day low sweep. And so once you have this in place, right, you now simply wait patiently for market open. Right, so when we wait for market open, we're typically looking for a 5-minute or a 15-minute fair value gap to trade from. And so here's where we have it, right? So here we have the low of the day. So we've taken out the previous day low. So let me make that nice and clear. We've taken out the previous day low, and now we have a 5-minute fair value gap, right? Or a 5-minute order block. And so the order block is going to be over here, right? So this is the order block. I'm going to label it in gray. So why is this an order block? So I often get a lot of questions about my order block, right? So this here is a fair value gap, you can see, and the market has broken structure. So when you're looking for a key order block to trade from, or you want to see a nice place to trade from, right? Order blocks will typically have a few things going for them. You will see a sweep of liquidity, a previous day low sweep. You will see a fair value gap and a breaker structure. This is primarily what we're looking for. And now from here, this is where we now go to the 4-hour PO3. So we know we're significantly below the weekly opening price. Now we're going to be using the 4-hour PO3, right? So the 4-hour PO3 is of course very interesting. And this is where order flow comes into the picture. So let me ask every trader here a question. When price comes into an order block, right? So let's kind of draw this out to the side, right? So again, there's a 3-step model I use for basically every single trade I take. And I want traders to understand the simplicity of this model. So when we come into an order block, right, there's basically 3 things we need, right? We first need a fair value gap to validate the order block. Then after that, we're looking for a PO3 alignment. So what do we mean by PO3 alignment, right? So PO3 alignment, this is the 10 a.m. PO3. You can see this line over here. We're looking to buy below the 10 a.m. Eastern at a fair value gap. Now, how do we know whether the fair value gap is going to hold, right? Because we also had a fair value gap down here in this region, right? So how do we know this fair value gap was the winning fair value gap? So the way we do that is by understanding the order flow, right? So the order flow is what can keep you in trades, what can keep you out of trades. And we're going to be going over a potential losing trade or a break-even trade that I took. And then we're going to look at the winning trade I took as well. So let's quickly head over to the Discord and see how I was reading the markets, right? And so what we're basically looking for, if we go to the VIP, what we're looking for essentially is this, right? So the pre-market game plan is very, very simple, right? So we're looking for ES, S&P 500. And so price is way below the weekly opening price. So we've had a previous week low sweep. So last week's low was swept as well as the previous day low, right? This gives us good indication in the London session that the New York session will be reversing higher, right? So this is typically how I had my pre-market game plan. You can see I was pretty accurate. So we didn't come down to the lower fair value gap, but we came down below the daily opening nevertheless. And so here again, the weekly opening price, the way I kind of saw things is we're significantly below the weekly opening price and we have a huge fair value gap. So price has reason. We have good reason to position ourselves for longs. And so if we now go down to the overall, so this was the first trade I took, minus 312. This was kind of the break even and the loss I took. So we saw now, this is the order flow, right? This is the order flow. And so we can see for basically almost 2 hours or an hour and a half, the market's ranged, right? So this range was pretty painful for me to trade and I couldn't quite grasp the actual direction of it, right? So what was going on here, very interestingly, is we had this, right? We saw the market heading lower in this particular direction, right? And then from here, we had a wick below and then a wick higher. So when the market is in this particular choppy direction, right, you want to understand who is in control between the buyers and sellers, right? This is really important to understand. You want to know who's in control between the buyers and the sellers. And so with that being said now, what you really want to understand is the delta. So what do we mean by the delta? So the delta refers to basically the order flow and the footprint charts, right? So the order flow and the footprint charts is what so many traders are missing, right? So this is exactly what we're going to be going over. So if we go to the Discord, right? The Discord basically tells us a couple of things, right? So let's just understand what was going on here. So the second trade I took was just under $400. We're up 247 at this time. And what I want traders to understand now is when we come into this order block or this fair value gap, right? So I just want, let's kind of bring this over to the left. I want traders to understand the significant amount of red delta sitting over here. So we had a lot of red delta in this region. What does this red delta represent? So this red delta represents the bid is a lot greater than the ask. And so when the bid is greater than the ask, this means that there's more aggressive sellers inside of this order block. And so this order block is exactly the same as this order block you see over here, right? So this order block, right, was exactly what we saw on the ATAS platform. So from here, I want to ask you a question. If you see a significant amount of aggressive sellers, right, we see a lot of aggressive sellers down here. We see a lot of aggressive sellers down here, right? So if the market gives us a lot of aggressive sellers, but the market couldn't break below this fair value gap, then what does that tell you about this fair value gap, right? So notice how we've wicked below, and this wick was responsible for huge amounts of aggressive sellers. In fact, we saw a huge amount of aggressive sellers in this wick. So this is where the order flow becomes very powerful, right? Because so what we have here is a fair value gap. We're looking to buy below the 10 a.m. Eastern, and the order flow is telling us that aggressive sellers, right? Aggressive sellers, mind my spelling, are failing, right? Aggressive sellers are failing. And so if aggressive sellers are failing, what this means is by default, passive buyers are in control. And this is what I want traders to understand. ICT concepts alone, liquidity and fair value gaps and power of three, these things alone are not enough. You need the order flow to validate your positions. And so as price comes down into this region and we're looking for some kind of buys in this region, you really need to understand that passive buyers move the market higher. And so if we see the market trying to push the market, if we see aggressive sellers trying to move the markets down, but the market breaks higher, because this is what we had over here, the market breaks higher, right? In this region, we saw that the market was breaking higher. This tells you by default, the order block is buyers are in control of this order block, because if aggressive sellers are at the zone and aggressive sellers cannot break below the zone, this means that passive buyers are in control, right? And that is what we had over here. What's super interesting is this candle. I want to draw traders' attention to this candle over here. This was a green candle, right? If we kind of zoom into the candle, this was definitely a green candle over here. But inside of this green candle, we had a significant amount of selling volume. We had a lot of bid volume over here, right? Look at this red. Look at the amount of red over here. We also had a lot of red coming as a retest. So we had a break and retest. This is your classic break and retest strategy. But again, what makes it a valid break and retest is that you actually know what's happening behind the break and retest. So we have a fair value gap, aggressive sellers enter the area, and aggressive sellers fail to break above the area. So this tells you by default that buyers are in control. And so if we go back to the regular candlestick chart, right, what you want to understand is the three-step process. Fair value gap, power of three, and then order flow. And this is what determines whether you take a trade, right? So again, to give you a little bit of more SMC detail over here, we have a swing low and a swing high, right? So this is our structural low, and this is our structural high. So notice how prices come below the 50% area. So again, this is going to be our 50% if we use a Fibonacci tool. Let me just draw that over here. So this is the 50% area. So this trade had a lot of confluences going for it. We saw price coming below the 50% area. So we know that we're in a discount, right? So let me just draw this. So we're in a discount, right? We've had price coming, retracing into a discount. We've seen significant sellers failing in this region, right? And we're below the 10 a.m. Eastern. Now, with that being said, this gives us the permission. This gives us the confirmation as traders to look for a scalp. So I want to see price break above the area and retest into the area. And so do you remember this candle over here, this large wick candle over here? This candle over here corresponded to this candle over here, right? So look at this rejection. Huge amount of sellers and the market broke higher. And then we had a huge amount of sellers inside of a green candle. So think about that. We had a large bid volume, right? So the bid was greater than the ask. There were more aggressive sellers, but the market broke higher. This shows us that sellers are being absorbed. Sellers are being trapped. Trapped sellers means that they're being trapped by who? The buyers. So the buyers are in control of the price. So when you come into a gap, you want to ask yourself, who is in control of the price? Knowing who's in control of the price is the most important thing. Sellers fail, buyers are in control. And so with that being said, now you could have taken a trade within this region. So this scalp trade I took was kind of around 58.65 area on the ES. So with that being said, if we go back to the candlestick charts, you could have taken a scalp trade like this for a 1 to 2 risk reward. Now the next question is, where do you target as a trader? I had a comment in the question about this. Where do you target as a trader? Well, good question. So with me, I like to be in and out of my trades in a single day. I don't like to hold trades, especially overnight. Now we have a fair value gap resting over here. What gave me confirmation to aim for this fair value gap was basically the idea that it's a silver bullet fair value gap, right? So for those who trade London and New York session, you'll know what a silver bullet is. This was at 1945 UK time, which corresponds to 14, so to basically 2:30 p.m. or 2:25 p.m. So this is within the PM silver bullet session, right? So you basically want to be trading from one silver bullet fair value gap to the next, right? But where traders go wrong is they don't understand which fair value gaps are going to hold and which are not going to hold. And this will come from basic order flow understanding. So if we just play price on a little bit, we can see price eventually, yes, comes close to our stop loss, but eventually hits our TP. Just a quick note on this. If you do get stopped out, let's say you do get stopped out over here, right? Let's say you have a tight stop loss and you get stopped out. Nothing is stopping you from re-entering this market, right? Nothing actually stops you from re-entering this market, because what's really going on is you can see here, even if price came down aggressively, did kind of stop you out here. What you can see over here is you can see a lot of aggressive sellers over here, which are not rewarded, right? Price breaks above twice. What you also want to understand is there's a zero at the bottom, right? There's a zero here. 26 for zero. 26 on the bid and zero on the ask. So you want to see that and think, okay, if there's a zero, it means that the auction is finished. I talk about finished auctions a lot in quite a lot of my videos. When there's only sellers and the market moves up, you can be sure that sellers themselves are trapped, right? Sellers were not rewarded. So this gives you extra confirmation that buyers are in control. And so if buyers are in control, you should really be buying. And so nothing is stopping you here to take a second, especially on the 1 minute time frame. You can perhaps sneak in another entry, right? So nothing is really stopping you on the 1 minute time frame from re-entering somewhere in this position, right? So you can enter over here with a slightly tighter stop loss, and you're again aiming for this fair value gap, right? So regardless, it was a tricky session to trade. I mean, we price chopped around here for about 15 all the way to almost an hour of choppy. In fact, we had about an hour of choppiness before the final move took off, right? Even this move was a little bit choppy, right? So to sum this up, right? To sum up what we've been through today, you want to be trading off a fair value gap, right? You want to be trading below the 10 a.m. Eastern or buying below the 10 a.m. Eastern, and you want to validate everything with the order flow. So that's our friend over here, right? This is our friend over here. Sellers are in control. Sorry, sellers are aggressive, which means that sellers haven't been rewarded at the fair value gap. Aggressive sellers struggling to break below the zone gives you indication that the market will be heading higher, right? So if you're stuck and confused as a trader, I want you to strip down your trading and look at less steps, not more steps, right? So this is basically the framework that I use in every single trade, right? So we had a buy trade, so of course price had an order block, we had a fair value gap over here. And so what we noticed is price coming inside of this order block. Let me make this a little bit clearer. So we had price coming inside of the order block. So price came down, right? Price wicked below and then broke up. And then we had this retest. So trading is all about basically trading at the right levels and understanding who's in control at the level. So when we see aggressive sellers here, and we have a wick below and price smashed above, this means essentially, simply put, that if the 10 a.m. Eastern is here, we know that we can buy from here because sellers are trapped, and we just aim for the 10 a.m. open, right? And that's exactly how you could have taken this scalp over here, right? So this scalp over here trading towards the next 15-minute fair value gap. So you trade from one fair value gap, 5 minute or the 15 to the next, right? And everything comes down to order flow. So if you like this video, give it a like, give it a thumbs up. And if you want to see me make more videos on order flow or NASDAQ or gold or Bitcoin or any of these markets, just feel free to drop them. Feel free to drop your ideas somewhere in the comments and I'll hopefully get back to all of you and make some more videos.